Hey folks, Dan Frio here with your market update for May 14th, 2024. So when you're in the mortgage business and you get news like this, you're thinking, oh boy, it's going to be a bad day. So let's get over to CNBC's Rick Santelli to give us that news.
We're hitting the wires. April read on producer price index, the wholesale inflation gauge, up 0.5% on headline, up 0.5%. That's up 0.5%, and that is the hottest read, well, just since February when it was up 0.6. And if we look at ex-food and energy, same number, more than double expectations, as Becky pointed out, up 0.5%. That is the hottest read there. It equals January. You have to go to July of last year to get a hotter read. Another hot read is ex-food, energy, and trade. It's up 0.4, exactly double expectations. To find a hotter read, you have to go to
Oh, enough of that. So the reading was a little bit hotter, not a little bit hotter, it was quite a bit hotter than what expectations were. So now you go over to the bond market. Let's see how interest rates are being affected by this right now, especially mortgage rates. You go over to it and right through here, that's what we focus in on, folks. What's going on? They're getting better. What in the world is going on? So I did something here, and this was like, okay, this doesn't make any sense. There were some numbers in here that were a little bit better than expected. But so I went in here, and Matt Graham, he kind of runs this thing, and he is a genius when it comes to telling us in this basically how do you interpret all these numbers? And he said basically right through here, I was like, how would you explain this to viewers out there? And then he said basically this. It's a wild ride. Let's chalk it up to previous month's revisions. So the previous month, the revision was +2. That number came in as -1. Okay, so that was a much better revision than was expected. So you can see right here, revision offset the big miss. Specifically, several of the components that contribute to the PCE were weaker. So when you look at it at just face value, it doesn't look too good. But then when you really break it down, let's break down these numbers for you right here. So this is the economic calendar that we have on MBS Live. This system is fantastic. So if you're a mortgage advisor, you need this program. But let's go into it. Let's break down the numbers. Core producer prices year over year, reading was 2.4 previously. Everybody expected 2.4. It came in right on the button. Now here's the part that I'm like, oh, this is bad. Core producer prices month over month. Last reading was 0.2. Well, it was revised to -0.1. Like I said, it was expected to stay steady. It actually went to 0.5. So we went from -0.1 to +0.5. A huge move. Now, will this get revised? And we might check. Okay, the next piece, producer prices for April, it gives you that. So that's basically all the numbers are right there, folks. So that's what's happening in the markets right now. You go to the economic calendar on the base, broad view on especially Bloomberg, it doesn't have any of this stuff. That's why I highly recommend using this system. So that's what's happening right now on that part of the equation. Let's see how the stock market's reacting to this. We have the Dow Jones up 75, the S&P up 8, NASDAQ up 28. Let's see what crypto's doing. It's down 1,400. I didn't expect that one. Let's see what oil's doing. Oil, I like this. I like this, that oil is on a decline, because you guys know how I feel about the oil piece of this equation. So basically what you got to do is learn from this is you can't really focus in on the headlines. You really have to know what's going on behind the scenes, and that's why I do this on a daily basis. So we have a lot of the factors that the markets monitor. One big factor is the PPI came in much hotter than expected, but a lot of revisions came in to kind of offset those numbers. So based on that, let's see what the MBS market's doing right now. It's still keeping its gains of 13. So let me put this in the context, folks. Here's where mortgage rates are, right through there. Okay, how do these things get created? These aren't my rates. These aren't any individual bank's rates. What happens is Mortgage News Daily up there, they do a fantastic job. They survey lenders all over the country, and they ask them 5 questions. Now, here's what most people don't understand about these rates. Most people go in and say, oh, my rate I should get is 7.12, no matter what your credit score is, no matter what. Well, these people over here, what they're getting is, or what the analogy is behind this, is these people has 5 criteria. Okay, they're buying their first home. It's going to be their primary home, and it's a single family. Those 3 things, okay? But these people also have a 780 credit score, and they're putting down 25%. If you want to learn more about that and figure that out, you can just click right here, learn about our survey, and it'll tell you right there. 780 credit score with 75% loan to value. That means you're putting down 25%. So that's not you, most likely. If it's you, God bless you. I'd love to help you as well. But if that's not you and you're trying to figure out what mortgage rate or what kind of rates you can get, well, let me at least advise you this. Please don't try to time the market. Don't try to time buying your home at the specific time that mortgage rates hit a low, a high, a middle, or whatever, because you're not going to pinpoint it right through here. I just Googled it. What's the best time, is it a good idea to try to time the market? It's highly unlikely you'll be able to time the market successfully. That's buying a house, timing the interest rates. It's the same thing with stocks. You're never going to buy that stock at the ultimate low and sell at the ultimate high. So there's yin and yang between all of that. So I just want to put that in perspective out there. So my name is Dan Frio. I do this video every day to inform you guys what's going on and the reasons behind the scenes. So if you're trying to get, kick the tires right now to see if you qualify, and you might come back and say, well, Dan, these rates that you're showing right here, I don't fit that criteria. So what kind of rate would I get? Well, I'll tell you how to do that. Go to the rateupdate.com. That's me. Okay. I'm a mortgage, I'll say a loan officer, a mortgage broker. I'm set up with, I think, 30 or 40 different companies right now. It's irrelative. What I try to explain to you guys is by using us, it's going to be one application, one credit pool, and we're going to scan your loan to over right now 30 or 40 different lenders. Otherwise, you're going to have to call all these places on your own, get quotes every day, because rates change every day and all day. So you're never going to be able to time that market perfectly on interest rates. So what a lot of people don't understand as well is when you put in your application at a bank, we all use the same systems. It doesn't matter if you're using us, if you're using Quicken, if you're using Rocket, if you're using Chase, whomever. We use the same systems to get you approved. So that means if one bank got you approved, well, I can get you approved. What they don't do, or what they don't tell you, is if you go to the bank or most of these lenders, they have one credit file and one program for you. Meaning if they have an FHA loan, they just have an FHA loan and here's our rates. With us, we're going to offer you all these programs. Plus, the nice thing about being set up with all these other lenders, I can use their programs and their rates so you don't have to shop around on your own trying to figure out this whole mess. So how do you get started? Well, go to therateupdate.com. Right up over there, it says apply now. You're going to click that, fill out your information within 24 hours. I'll get back with you and answer all the questions that you got. But a lot of people they're not figuring this part out. They're like, hey, I got the income to make my payments. I got great credit. I worked on that like heck, but this inflation is killing me and I just don't have enough money to put as a down payment, plus closing costs, plus pay my realtor and everything else. Is there any help out there? Well, yeah, there's a lot of grants out there and a lot of down payment assistance programs, but most of them, they're not very good. So what we did up through here, you can see grant. What you're going to do is you're going to click the grant finder. Just answer, I think it's about 7 or 8 questions. It's going to tell you if you qualify for 3 amazing grants. These grants, there's no paybacks. You don't have to pay them back. They're completely forgivable at the time of closing, and they'll give you grants up to $7,500. Okay, so there's three opportunities down there. So check it out, see if you qualify, and if you do, click the Apply Now button. We'd love to help you. So that's it for today, guys. We'll be posting a video later this afternoon, giving you a kind of midday report on if the mortgage rates are holding up based on this data we have today. So check that out as well. So other than that, have a great day. God bless, and hope to see you here later this afternoon.